tariffs were supposed to be a weapon, a show of strength, a strategy to protect American industries and dominate global trade. But instead of securing economic power, they have ignited a financial disaster so massive that in just one day, the US stock market lost $4 trillion in value. This wasn't just a random market dip. It was a direct consequence of a tariff war spiraling out of control, leaving businesses scrambling, investors panicking, and contrary to expectations, it is the US, not China or Canada, suffering the heaviest blows. What started as a strategy to make America economically invincible has now turned into a self-inflicted wound, draining wealth faster than any foreign adversary ever could. Before we dive deep into the details, if you want more insightful discussions on global economic shifts and Africa's evolving role, subscribe to the African Web and turn on notifications. The trade war with China was meant to put Beijing in check. Trump's decision to raise tariffs on Chinese goods from 10% to 20% was designed to squeeze China's economy, force businesses to relocate to the US, and strengthen America's industrial base. But instead of backing down, China retaliated with ruthless precision, slapping heavy tariffs on US agricultural goods. The backbone of America's economy, farmers who rely heavily on exports of wheat, corn, and poultry, suddenly lost one of their biggest buyers. Shipments stalled, demand plummeted, and the very people Trump had vowed to protect saw their revenues collapse. Meanwhile, Wall Street entered full-blown panic mode. The tech sector, which had driven the market's growth for years, found itself in freefall. Apple, Nvidia, and Tesla, companies dependent on global supply chains, took massive hits. The Nasdaq plunged 4%, dragging investors down with it. Tesla alone lost $125 billion in value. This wasn't just about short-term losses. It was a replay of the 2018 to 2019 US-China trade war. Back then, tariffs had disrupted supply chains, forced companies to raise prices, and slowed global economic growth. Now, the cycle was repeating itself, only this time with even higher stakes. Businesses, unsure of Trump's next move, slashed investments, put expansion plans on hold, and hoarded cash instead of hiring workers. Confidence in the US economy was collapsing. China didn't just retaliate against American farmers. The ripple effect of these tariffs spread across multiple industries, affecting companies reliant on Chinese raw materials and production. American automakers, for example, saw the cost of steel and aluminum rise due to the tariffs, forcing them to raise prices or absorb losses. Even companies that had initially benefited from the Made in America push found themselves struggling with increased production costs. The semiconductor industry, which relies on rare earth elements sourced largely from China, faced higher expenses, resulting in layoffs and reduced R&D investments. The impact wasn't limited to corporations. Consumers felt the pinch as well. Tariffs on Chinese imports led to higher prices on everyday goods like electronics, clothing, and home appliances, reducing purchasing power and slowing economic activity. If the trade war with China was predictable, the tariffs on Canada were downright reckless. Canada has long been one of America's closest economic allies. Yet, Trump imposed a 25% tariff on Canadian imports and a 10% tariff on energy exports, expecting Canada to cave in. Instead, Canada retaliated with a 25% surcharge on electricity exports to the US. This single news sent shockwaves through the American energy sector. Suddenly, electricity costs for US manufacturers surged, making it even more expensive to produce goods domestically. Delta Airlines, one of the largest US carriers, announced that its profit forecasts have been slashed in half due to economic uncertainty caused by the tariffs. Investors panicked, triggering a sell-off that sent Delta's stock plunging by 14%. The broader stock market began to spiral, with the S&P 500 collapsing as hedge funds dumped their stocks at the highest rate in 2 years. The message was clear. Businesses were losing faith in the administration's ability to manage economic affairs. The tariff war with Canada led to an unexpected energy crisis. Natural gas and oil prices surged as trade restrictions disrupted long-standing supply chains. American energy companies that relied on Canadian oil imports faced significant shortages, driving up gasoline prices across the US. Higher fuel costs further strained consumers and businesses, leading to inflationary pressures that the Federal Reserve struggled to contain. For American households, this meant increased heating bills in winter and skyrocketing prices at the gas pump. Small businesses, particularly in manufacturing and logistics, faced higher operational costs, forcing them to cut jobs or pass expenses onto customers. Losing $4 trillion in market value isn't just a bad day on Wall Street. It's the kind of financial disaster that reshapes the global economy. The sell-off wasn't limited to tech stocks or agriculture. It spread like wildfire, hitting banking, retail, and even cryptocurrency. Bitcoin, often considered a safe haven during market turmoil, fell 5% as investors fled risky assets. As stocks collapsed, investors ran for safety, sending bond prices soaring. The yield on 10-year U.S. Treasury bonds fell to 4.22%, a clear signal that money was flowing out of the stock market and into safer government securities. When investors prioritize safety over growth, it's a sign that they're bracing for a recession, and that's exactly what's happening now. Despite the carnage, the Trump administration showed little concern. Some insiders even suggested they were comfortable with a market downturn if it helped them achieve their broader trade goals. But this level of financial destruction isn't just about trade, it's about shaking the very foundation of America's economic future. Beyond the numbers, the psychological impact on investors was immense. The sheer volatility caused by the tariff war led many retail investors to panic sell, fearing further losses. Institutional investors, hedge funds, and pension funds reallocated their portfolios to minimize exposure to high-risk sectors. A prolonged market downturn would mean severe consequences for retirement funds, as many Americans rely on 401k plans tied to stock market performance. As pension funds shrink, retirees and those nearing retirement face financial insecurity, exacerbating economic instability. What's most alarming is that this isn't just a trade war, it's economic self-sabotage. Other nations aren't waging war on the US, they're merely responding to a reckless policy that has thrown America into a downward spiral. While Trump's tariffs were supposed to restore economic dominance, they have instead triggered uncertainty, inflation, and capital flight. Even worse, there's no clear exit strategy. Trump didn't implement these tariffs with a carefully structured long-term plan. There was no contingency for economic retaliation, no diplomatic groundwork to prevent escalation, just political posturing disguised as economic policy. Now, the markets are responding with brutal honesty, wiping out trillions in wealth and leaving American businesses and consumers to bear the consequences. Markets don't run on bravado, they run on stability, confidence, and long-term security. The $4 trillion that just vanished from the US stock market is a direct verdict on Trump's failed economic experiment. And this isn't just about Wall Street. This affects jobs, wages, retirement savings, and businesses' ability to expand. If investors flee, businesses shrink. When businesses shrink, people lose jobs. When purchasing power declines, a recession becomes inevitable. The question now is, how much more destruction will America inflict on itself before someone stops the bleeding? Will Trump step back before irreversible damage is done? Or will the American people force him to act before their economy is completely ruined? Let us know your thoughts in the comments section. If you found this video insightful and want more deep dives into global economic shifts and Africa's evolving role, subscribe to the African Web and hit the bell icon for notifications. Thanks for watching, and until next time.